Hello, and I welcome you all to the market update from 24 to 28 February 2025. And this is a very loaded presentation on the on the markets with a lot of data points and a lot of information that has happened in one week. And since it was a monthly closing, so there would be monthly data that would be presented along with it, along with the usual weekly data. So let's start with the usual world economy. The US GDP data came out, and US economy expanded by 2.3% at an annual pace from in the month of October to December 2024, which was unchanged from the initial estimates. So this buoyancy was cause of the resilient consumer spending, which advanced 4.2% during the period. The for the full year, U.S. GDP is now pegged at was is now pegged at 2.8% of an increase. Another news that came was on the high inflation data from U.S. The Labor Department released a personal consumer consumption expenditure in price index on Friday, which showed that prices have increased by 0.3% in the month of January, which on the year-on-year basis, the prices rose by to 2.6%, which was definitely down from December's reading of 2.9%, but still it's above the Fed long-term target of 2%. So this is a data point which Fed definitely looks at whenever they are trying to make up their mind on the rate cuts and everything. On the monthly basis also, since the treasury closed at 4.22%, it has softened from 4.5% in the last week and towards the end of the month, where it was hovering around 4.4 to 4.5. It was only towards the end of the month that this number came down. US dollar index on a weekly did rise to 107.564. It was hovering around 106.7 range in the last week. But when we look at on the monthly basis, this number has come down from 108.13 in the month of January to 107.564 by 0.52%. It has corrected in the overall months period. Oil in the week on the weekly chart, it was down by 1.45%, trading at $73.16 a barrel. But on a monthly chart, we could see a large correction that has happened in the oil prices. Now it has come down to 4.7% from 73.16 dollar a barrel. If we look at the gold prices for the week was down by 2.1%, currently trading at 84,202 per 10 grams. Uh, there was, but the upward movement in the gold is still there on the monthly basis. From the last month, it has gone up by 1.31%. That's 84 in the last month, that is 84.202 per 10 grams by 1.13% in the last 1 month. If we look at the overall, now we move on to the overall how the global markets looked. In the last week, there was a correction that has happened in the Nasdaq. Therefore, the Nasdaq index was down. The uh, weekly corrections in was seen all the markets, not just limited to the US markets. The Asian markets was also correcting. Whereas when we look at into the 1 month period also, there was some weakening that we could see in the US market. So with the Trump trade tariffs coming in and all the uncertainty in the environment that has been created because of these tariffs, the US market are pricing in that there would be a slowdown in the economy. So there's a correction that is happening here. Whereas the European market was up in the on the month-on-month basis, the Asian markets were feeling the heat. Whereas we could see that the Hang Seng and the Shanghai Composite market, they ended up in a very positive zone for the last one month. So the technological revolution on the deep six side has initiated uh, some constructive hope in the Chinese economy that there would be some growth that would be coming in on the technological side. India also came out with the GDP number. India's GDP growth for the third quarter, that was from the October to December 24, stood at 6.2%, which was a significant improvement from 5.6% growth, which was recorded in the Q2 quarter of. Furthermore, the full year, and that is FY25, second advance estimate has been put forward to 6.5%. Marginally, it is higher from 6.4% growth, which was estimated earlier. How are the Now we move on to the how the sector-wise growth has come in. The agriculture showed a very good recovery in this quarter, growing at 5.6% year on year, uh, higher than 4.5% growth which was witnessed in the last quarter. Whereas secondary sector showed a muted growth with just a 4.8% growth over the 4.8% growth as compared to the 5% growth in the quarter three. The growth was there was significant growth that came in from the manufacturing sector with a growth of 3.5% in the Q3. The growth was impacted majorly because of the construction activity growth, which fell to 7% in the quarter three, down from 8.7% in the previous quarter. On the tertiary sector side, that is the services sector side, there was a broad-based momentum. Growth was at 7.5% year on year as compared to Q2, which was 7.2. The growth, the improvement in growth of service sector was on the back of higher growth in growth in trade, hotels, transport, communication, and broadcast servicing, which had jumped up by 6.1% in Q2 to 6.7% in Q3. So 6.7% is the increment that we could see in this sector. The financial, real estate, professional services, and public administration defense maintained a healthy growth rate similar to the last quarter. So there was a services on the services sector side. We had largely the momentum of 7.5% growth was still continued on this side. The expenditure component, if we look at the expenditure component, growth in private consumption expenditure came at 6.9% in Q3, which was higher from the previous quarter of 5.9%. Government consumption growth again rebounded in this quarter at 8.3% from 3.8% in the Q2. The exports has also grown by 10.4% Q3, higher than 2.5% Q2, largely on the account of robust services. So services exports was a major contributor to the exports growth in this quarter. The gross fixed capital formation. This is an area of concern which remained muted at 5.7% as compared to 5.8% in the Q2. Now we look at the how the FIIs were in the last week. For the last small week of 4 days, there was a large FII selling that we witnessed. FII sold close to 22,000 crores worth of equities, whereas DIS pumped in 22,252 crores worth of equity. The FII selling again is on the uncertainty in the world economy or over the term trades, how that would come in, how would that impact the other economies. For the month of February, since we closed this month, there was a large outflow from the FIIs. They sold close to 58,988 crore worth of equity in the cash market. whereas DIS had been pumping in money, and they pumped in close to 64,853 crores worth of equity in the Indian market. Looking at the weekly and the monthly performances, Sensex fell by a large percentage point in the week because of the large selling that has happened in the last week. Sensex was down by close to 2.9 percentage point. Mid caps were hit hard, close to 5 percentage point. The small cap was hit even harder, close to 6 percentage point. The monthly performance also showed a weakness where the Sensex has been down by 5.7% in the week in the month. Nifty mid cap was down by 10%, corrected by 10% in this month. Nifty small cap has corrected by 13.4% in this month. It becomes important to see how much the correction has happened from the peak that the market achieved in the month of somewhere in the month of September last year. Uh, so Sensex has corrected by close to 15% now as on date. Nifty Bank has corrected by 11%. Nifty Mid Cap 100 has corrected by 21% now. Nifty Small Cap has corrected by 24% as of now. If you look at the valuations are currently looking very attractive in the Nifty 50 P trailing, which has reached at a number of 19.7, which is below 2 years average and the 5 years average, very much below 2 years and the 5 years average. The Nifty mid cap 150 trailing P is 33.4, which is just above 2 years and 5 years average. Even after this correction, the Nifty 150 trailing P is still above the 2 years and 5 years average. The Nifty small cap 100 trailing P is now at 25.2, which is below 2 years and 5 years average as on date. If we look at the Buffet indicator, the Buffet indicator shows that the economy as on date is currently modestly overvalued with a ratio of 110 percentage point. The Indian bond markets, so when we look at the Indian 10-year government bond yields, were at 6.72% yield, which was the similar number we had in the last week. There was no softening that has happened on the Indian bond yields as of date. The yield curves in the long, medium, and flat are flat as of now. The short-term yield has inverted, but this doesn't show has a much of implication as on date now. Uh, so that was all from my side. Hope you enjoyed this video on the economic and the market updates that and the major events that has happened in the last week. Do share, subscribe, and like our channel to get weekly updates from our side. Thank you.